All right, so we're gonna kick the session off. If you're brand new, just kind of bear with us as we go along. Hopefully we catch some setups. That way you can take the trade. Now, of course, you can practice this on demo. You can utilize your demo account if you just want to practice it out. But if you naturally see the setup, if you believe in the setup, if you want to take the setup, utilize proper risk management. And that's the first thing I'm gonna go over today is the possibilities of getting a funded account. We can't stress this enough. The opportunities and the doors that you will open if you was to get you a funded account. If you're not aware, if you're a trader, most of us, when we first came in the game, a lot of us was investing our own money. There's nothing wrong with that as long as you understand how to allow your money to make more money for you and duplicate itself over time, utilizing some of the resources as a trader, you can do so. But a lot of us came in investing our own money, especially if you're brand new and you jumped in like I did. I blew a few accounts when I first got started off. I blew a lot of accounts when I first got started off, but that's in the past, right? But we don't want to do that. We want to utilize proper risk management, understand the discipline and the patience when it comes to Forex. And when you tie all of that stuff together and you have your own style, you have your own trading session, your own time of day, and you work towards almost like a job or a business, you have to make sure that you're utilizing your proper resources and doing it in a disciplined manner. But if a lot of the times people were coming in and they were blowing accounts, right? But eventually they got it to the point where they can ultimately invest their own money. And some people just may have to start small depending on their level of where they're standing financially, right? Some people may only have an extra $100 or $200 or $1,000 to start. And there's nothing wrong with that. Over time, you can accumulate I've done it, and a few people that I'm connected with, I know that have done it where they started small accounts, and with discipline and proper risk management over time, it accumulated to large accounts. But now we have the opportunity where you don't necessarily have to even invest your own money. You can get a prop firm, pass a prop firm challenge, and get funded anywhere between $10,000 to $300,000. So what I'm gonna show you guys is the possibilities of using the moves that we're gonna show you. We're gonna go through some of the setups earlier today, and hopefully we'll catch a setup while we're doing this session. Right, I got a few screens, so I'm watching it as we're talking. But I want to show you guys the opportunity and the possibilities of having an account balance of $100,000. Let's just start with 100,000. Now we can go with 10,000. You can go with 200,000, 50,000. But for this video, we're just gonna focus on $100,000. So imagine yourself, you're utilizing the tools, the signals, the resources that we have inside of the community. You pick the prop firm that you're gonna go with. There's a few of them out there that you can go with, right? That's totally up to you. And you get your account balance or a funded challenge of $100,000. And then you utilize the tools and the signals and either our live sessions on your own manual training. After you understand how to use the tools and the signals, you'll be able to pass that funded account challenge and get a live account of $100,000. I know when I first started trading, I did not have $100,000 to just put into an account, but I'm gonna show you guys the power of having a high account size. Because if you had a $100,000 account, right, and you wanted to risk a bare minimum of 1%, 1% is a proper risk management, right? As long as you're not over leveraging on your account and this, that, and the other, 1% is normal. 1% per trade. Sometimes some people, depending on the actual trade itself, some people may go to 2%. Some people may go 0.5%, just depending on how many trades they have in. If they want to stack trades, everything like that. We'll get into that in later sessions. But say, for instance, you wanted to risk 1%. And off of these setups, based off of the hour chart, off of our signals alone, ultimately, the most you will have to risk is 40 pips, right? So say, for instance, we'll put 40 pips in. And for those that have been following our sessions, following the signals, they know that our signals win well over 60% of the time. We've had weeks and days where we had 70%. I believe actually today, out of 11 signals that we sent out, all 11 of them hit at least 20 pips. So it's a hit or miss. We can't necessarily put an average on the market because it's unpredictable. But say, for instance, if you're winning more than you're losing and you're utilizing proper risk management, 40 pips, you can do a trade on a standard lot size of 2.5 on a $100,000 account. Now, ordinarily, an ordinary trader will look at a standard lot. If you've already been trading, you've been practicing, a 2.5 standard lot size is huge, right? People will get scared when they get into that higher lot size. But if you understand that you have a higher account balance, utilizing a lot size of a 2.5, even if you lost the trade, you only lost 1%. which is $1,000. You know, it sounds like a lot, but being that you have a large account balance, you're in the clear. I mean, you're still utilizing proper risk management. So we're going to use this pip position size calculator as we move on. If you wanted to practice and you're trading, if you're not utilizing a pip size calculator, you can go to babypips.com. They have in the tool section, they have the position size calculator. I highly suggest you utilize this on all of your trades. It's going to make sure that you're utilizing proper risk management, especially if you're trading on a funded account. You do not want to go over your daily limits or your overall drawdown limits, things of that nature. So you're going to have to utilize tools like this to make sure that your numbers is right and you're utilizing proper risk management consistently. Therefore, even if you do take a 40 trade loss, you're not over leveraging and you're not blowing your account. So we're going to go back to the chart. Hopefully you guys are still with me. All right, so what we're going to do here, we're going to go over some setups from earlier today based off of the tool. If you don't understand the tool, hopefully by the end of this video, you'll see the power in the system that we have. The golden key zone, the session key zone are two of our top 5 tools that we have that you'll have access to. The session key tool is mainly for the Forex pairs, and I'm going to give you a sneak peek on our double confirmation of utilizing the golden key tool with the session key tool on these Forex pairs. But ordinarily, the session key tool is our zone is this blue box that you see, right? And it will also give you your take profit zones 1, 2, and 3, and it'll give you your stop loss. It'll usually have the numbers here, but based on the training and showing you these zones, I didn't want to dress up the chart with too much stuff. So I just kind of took that off, took the shade of the zones off, and just left the lines here. So it will give you your take profit 1, 2, and 3, and your red line is your stop loss. This little orange lines that you see is naturally your entry points, right? So that's just the basic of how the tool is and what it looks like. But mainly we're focusing solely on the zones. We have different zones, and these zones are very important, right? And you're going to understand that as you see this tool as we move along in this video. But as a trader, just dependent, regardless of what tool you're using, regardless of what strategy you're using, ultimately we are in the markets to profit, whether you're buying into the market, buying an asset, or you're selling an asset. And we have to understand as traders, a lot of the times people come in with the mindset, they don't necessarily understand the mindset. So we come in through the retail sector with a retail trading mindset. But throughout these tools and understanding these tools, you will understand that we've been trading backwards a lot of the times. So I want you to guys to just focus on the fact that if we're selling the market, you ultimately want to find the highest price possible to be able to sell. If you're looking for a sale, your confirmations is telling you to sell, you got tools and setups and everything is pointing to a sale. You just don't want to jump into the market blindly and just jump into a sale. If you want to sell, you have to make sure that you find the highest point possible because you want to sell from the high. And vice versa, if you're looking for a buy, you don't want to buy when the price is going up. You want to buy when the price is at a low point. Even as of right now, we're going through a crazy crash in the crypto. A lot of these times, these are the times when people can really load up. And ultimately, if and when it does go back up, the ones that got in now, as everybody else is panicking, if you buy at the low, you'll ultimately make a lot more money. So if you want to buy in the markets throughout these sessions, these trade setups, you're going to see ultimately, the zone is going to give you 2 points of direction. If you wanted to sell the market, you can either sell at 2 areas of the zone, ultimately the highest point of the zone or naturally the beginning of the break of the zone. These zones are very important. So if it's under the zone, we ultimately want to sell. And if it's above the zone, we ultimately want to buy. So I'm going to start off on the side. Hopefully you guys can see my chart. This is my hit list, right? My hit list is of the assets that I can take advantage of based off of the session key tool, the golden key tool, and some of the other tools that we have in our perfect entry trading system. And all of these, I don't necessarily, you don't have to trade all of the pairs, right? Some of these setups, you might have a favorite pair. And I know a few people that have, they only focus on gold, so they just focus on the golden key. I have a few people, all they do is focus on GBP, JPY. A lot of people love USD, JPY. If you have a favorite pair, this tool is going to help you maximize some of the movements inside of that asset or inside of that market. But as you can see, the tool works on all pairs. You do not have to trade all pairs. You don't have to take all setups. Now, if it's giving you a good setup, higher probability, if you take all of the setups And just like today, if you took all 11 trades, you would have had all 11 trades in the profit. Some of them went well over 100 pips profit. A couple of them went over 700 pips profit, right? But if you took 4 losses and there's 11 trades and you only take, and it's just your luck, you take 4 out of the 11 trades and all 4 trades that you happen to take were losses, it doesn't necessarily mean that the tool doesn't work. It's just you didn't open up your doors to the highest probability of all of the trades for that session. So understanding that, we have to also factor in that if we do have access to the tools, we can find our optimal entries. If we can find an entry on the setup, and just like as we were saying on this position size calculator, if you take a regular setup from an hour chart, your stop loss may be 40 pips, and you're still allowed to trade at least $25 per pip. So if you're trading on an account balance of $100,000, all you really need is 10 pips if your stop loss is 2.5. If you get 10 pips on this trade at $25, you earn $250 on that trade. And if you do that conservatively, consecutively throughout the day, maybe 2 or 3 setups or 2 or 3 pairs, and you're doing that throughout the day, the goal is minimum earn 20% on your account balance. 20% of $100,000 is $20,000. In order to earn $20,000 a month, you'll have to factor in the losses and everything like that, but it averages out to about $1,000 a day. So I'm gonna show you setups to where you can get your 10 pips for your $250. But if you can lower your lot size, your stop loss to 20 pips, you are now trading at a 5 standard lot. So if you're trading at a 5 standard lot, which is $50 a pip, and you're still going for 10 pips, now you're able to make $500 on the trade instead of $250 on the trade. Your loss is still 1%. But now that you have a lower stop loss, you can up your lot size, ultimately earning more money on the exact same trade. So the goal is to find the low risk, high reward trades within the setup utilizing the zone. So let's go back to the chart. Now we're going to start. I'm gonna just briefly go through these setups, right? We're going to do a brief recap, and then we're going to dive into the actual tool itself. Let me do a quick scan. All right, so we good so far. No setups happening. All right, so just briefly, notice here we got this sell. We got this buy here. The buy was short-lived. Here's one of them trades that you probably would have caught a 40 pip loss, right? It's not 100%. We're not saying that this tool, nothing in life is 100%. Nothing in life is perfect, but this tool definitely works. So let's go to the sell. The sell setup definitely gave you everything that you lost on the buy. If you took the buy, you caught the sell out the zone, and it gave you 160 pips. Ultimately, 160 pips. You might have closed out at 20. You might have closed out at 40. You might have closed out at 50, 60, but ultimately it ran down for 160 pips on Euro USD. Let's go to Euro CAD. And I'm gonna go through and I'm gonna show you how you could have caught these entries on a lower time frame. Right now, we're focusing solely on the conservative 1 hour signal, right? But throughout this video and throughout this session, I'm gonna show you, and on our live sessions, we're going to be finding entries on the 5 minute, 3 minute, 1 minute, 15-second chart. But ultimately, the signals do come from the hour, so we're just going to briefly scan through so you can see how powerful these signals are. Look at this sell, straight into profit for 3 hours. No drawdown whatsoever. Sell from the orange line, that's another 100 pips to the downside. Euro NZD, here's a sell, short-lived, hit your stop loss. Right? Actually, the sell did hit take profit once, so you did catch about 20 to 25 pips on that. But the buy definitely came down and hit the stop loss. Now, these is one of the trades that we're going to go through briefly to where you would have found the entry on this trade, right? So just like we were saying earlier, if you want to sell a market, ultimately, where do you want to sell at? Do you want to sell when it breaks these lows? The retail traders are waiting for it to break the low. They're selling down here. Even if they did, they still caught a move. And they still caught their 20 pips. But do you want to sell from the low? Because notice this is the low. This is the low. That's why it bounced. This is the low. That's why it bounced. Do you want to sell at the low? Are you going to ultimately wait for it to break the low? Or do you want to sell from the high of the zone? And as we go through our trainings, through our live sessions, you're going to understand how to utilize this tool to find the ultimate optimal entries. Yes, it's telling you to sell. You can sell down here if you want and run the risk of losing 40 pips, or you can sell from the high of the zone. And then now you're risking 10 pips or those 20 pips that we showed you. That way you can use a standard lot size of 5 instead of 2.5. So if you catch the sell from the high of the zone, it gives you a lower risk to higher reward trade. And you can ultimately take it from the high of the zone, Because again, all we're looking for is 10 pips. High of the zone to the bottom of the zone is 30 pips. You can be done before it even breaks the zone, because you understand that the zone is very important. It's the session key. Not only did it break the zone, but notice again, if you want to sell the market, where do you want to sell it at? The high. You don't necessarily want to sell it. All right, we got Euro JPY. We're going to pull up Euro JPY real quick just to see what it's doing. We're getting a break right now as we speak on Euro JPY. So we're going to watch that. We're going to go down to the 3 minute, see what it's doing. It's at the low as we speak. So we're going to see if it wants to break, and we're going on the low. Ultimately, we're looking for the ultimate trend, which is coming from the higher time frames, right? So if we're utilizing a signal on the hour time frame, we have to wait for that hour candle to close to give us the signal, a signal that it's closing below the zone. Therefore, you want to sell. Now, you have the choice. You can be the conservative trader, and you can wait for that hour candle to close, or you can get early by getting in on the first 3 minutes of that hour candle. Right now, we're in the 24 minutes of an hour candle. So we're kind of getting in at an early rate. That's if we was to get in this trade. I'm not telling you guys to jump into Euro JPY. It's not selling yet. It's still in the zone. Give me a second. It's still in the zone. So now that we're on a lower time frame, all we're looking for is a natural break of the zone. And as long as it stays below the zone, we know that we're in seller's territory. Now, if it breaks below the zone and it comes back into the zone, we have to find our points of interest or our points of rejection. That way we can stay in the trade. Ultimately, if we was to sell this market, our stop loss is up here. So it will be about 40 pips or so, right? Well, that's 30 pips to the stop loss. So if we was to take this trade, plus 1% on a $100,000 account, just for hypothetically, we're going to utilize $100,000 at $333. No, $33. Yeah, $33 per pip. So if we want to sell this market, we want to catch it at the best price possible. As you can see now, it's pulling back. Where are areas of resistance? We have to look back and see where the area where it was stopping at, where it was rejecting that, which is there. And then ultimately you have your ultimate high, which is the high of the zone here. So my first area of resistance is now this yellow line. If I can get price at this, if I ultimately want to sell, do I want to sell way down here, or can I sell from up here? Do we know it's going to sell? We don't. We're not a magic ball. We can't predict the market. The market could be very unpredictable. But once you understand these zones and you understand how to utilize these tools, you'll see the conversion rate of these tools is very high. So all we have to do is factor in the conversion rate and find the best possible trades, depending on the pair, right? And find the best possible entry. So if we are selling the market, if I am anticipating a sale, I can sell from the break of the zone, because I do know under the zone, it's in seller's territory, right? But if I want to get a great entry, I want to get an entry from the high of the zone. Will it come to the high of the zone all of the time? It won't. There's trade setups, and we're going to see throughout this session where it will break the low of the zone and it won't retest the high. It won't even retest the bottom of the zone. It'll go straight into profit. Does that happen all of the time? No, it doesn't. Do we know when it's going to happen? No, the market is very unpredictable. But if you understand the tool and know the tool, once you get used to the tool, back test with the tool, utilizing the signals, you'll have an understanding of when you can trade. Right now, we're in a session at 6 p.m. We start at 6 p.m. with the session key, right? We got traders, they don't even start trading until after 6 p.m. Some people look at 6 p.m. as the Asian session. Yes, it is the slowest session out of all, in a sense, but we find natural trade-ups during the Asian session. Some people can't get up at 3 in the morning to trade the London session. Some people have to work in the morning, so they can't trade the New York session, right? Between 5 p.m. and 10 or 11 p.m. is a lot of people's time where they can try to find that 30 minutes or an hour to find some setup. So utilizing these tools, we've narrowed it down to strategies and systems in these zones where you can focus on those time frames between 6 and 9 p.m. of the session key. It may take longer. I've seen setups to where the setup happened between 6 and 6:30, and you put your 10 pips, because if we're using funded accounts, all we're looking for is 10 pips. Now, ultimately, you want to catch 100 pip moves. We had a whole bunch of them today. We're going to go through them, and right now we see that it's bouncing from this low. So we're going to pay attention to Euro JPY, and we'll put it on another screen somewhere so we can watch it. USD JPY is starting to do the same thing. So give me a second, you guys. Let me get Euro JPY set up over here. All right, so right now it's actually rejecting from the low, right? Because ultimately, if we wanted to buy this market, where would we buy it at? This may, we don't know where the market is going to go after the, I mean, this zone is going to give you a great tool to utilize to find great entries as the market is moving. But we don't know, this market could buy 100 pips between today and tomorrow, or it can sell for 100 pips between today and tomorrow. We don't know. But if it wants to buy, where should we buy from? The low of the zone. If this was to be the low of the day based off of this zone, not saying it is, I'm not telling you guys to get into a buy, but hypothetically, if this was to go up 400 pips throughout the day, which would be the best two areas to buy? From the low of the zone, and ultimately, if it breaks this zone and it comes to retest to respect, you want to buy it at the high of this zone as well for it to go up. And you're going to see that in some of these trades. Let's go back to where we stopped at. I believe it was EuroCAD. Let's go back down to let's go to the hour chart, zoom in. I want you guys to see these setups before we get into this, some of these live opportunities. I want you to understand the power of the session key tool. Right, so we're going to briefly scan through these setups. So here goes that sell, right? Got the sell from the top of the zone, gave you 100 pips. Notice where it stopped at. Notice where it stopped at. It stopped right back at the zone, broke back outside of the zone again. Those retest entries, in case you missed the first sell. A lot of people are seeing the sell. They're seeing this sell, not understanding these zones and understanding how the market works. People get the fear of missing out. They start jumping into the sell. They jumped in too late, and then it pulled back. Now they're seeing all of this buying opportunities, and they close out the sell, and then they start hedging and jumping into the buy, not even understanding that the zone is here. They're buying. It respected the zone, and then they got put into a trap all over again. Because if you caught it back out the zone, once it closed back into the zone and it's coming back out the zone, you sell it from the zone and you caught another 20 pips. All you need is 10, right? So let's go to the next one, Euro NZD. Euro NZD. I think that's where we stopped at. So let's go back to, here goes that sell and that retest. Again, I think this is where we stopped at before that Euro JPY signal came in. But notice we got the sell and look at the retest. Where did retest? At the zone. And you catch the sell back out of the zone on a lower time frame. You're catching the sell out of the zone again, and you put another 100 pips, 140 pips ultimately to the downside. But I mean, literally, it really was no pullback. I mean, the only brief stop was here. So if you did have a trailing stop loss, it may have pulled you out here. If you was moving it down manually, you probably caught this entire move. You'll probably still be in the trade. Let's go to the next one. Euro AUD. Euro AUD. Same thing with Euro AUD. Ultimately, we caught the sell, hit the take profit. The buy was invalid, so you made a quarter loss on the buy, but you caught the sell back outside of the zone. Here goes that retest back into the zone, and then you caught the sell all over again. This is for the ones that have access to the tools and understand how to manually take advantage of these tools. And again, this is for the conservative signals based off the hour chart. When you see it on the lower time frames, you're going to see how potent these zones are, right? So let's go to the next one. Euro JPY. Euro JPY gave us a buy at the beginning of the day, straight into profit, 80 pips. That was an easy, clean buy, straight from the zone, straight up, no pullback whatsoever, 70 pips. We caught your first pullback, probably got out at about 50 pips or so and went back to 70 pips and took off, right? It took off. Notice the sell out of the zone again. If we're going below the zone on a lower time frame, you could have potentially caught this entire sell. Even if you caught the sell based off the signal itself, it sold all the way down here, but you still caught 80 pips. Again, all you need is 10. Right? Let's go to the next one. Euro GBP. Euro GBP, a sell. Where did the sell come from though? Straight from the top of the zone. Not only did it come from the zone, this is the entry. This orange line was the entry to sell. That's an easy 60 pips to the downside. And guess what? Look where it came back to. To the entry. So if you had to quote the sell back outside of the zone again, it didn't look like much, but you still quote the 10 pips. That's 16 right there. All we need is 10, especially when you're focusing on the lower time frame. Look at this sell. GU. I think somebody was talking, a few people were talking about GU today. Look at that sell. No pullback. It didn't turn around to see if anybody was following, not one time. 5, 6, 7, 8 hours of straight bearish activity. Look at the sell. This is the zone here. It may be a little closer to the zone, but notice this zone. This is the previous zone. It's a little bit wider. This is our zone. Straight, no buy. It didn't tell us to buy at all. Straight sell. Straight into profit. If you took it out the zone on the lower time frame, is 190 pips. If you took it from the sell signal, you ultimately could have caught 160 pips. Again, all we need is how much? 10. But these are one of those trades. You get 10 here, 10 there, 10 here. And then this one, it just ran. It didn't come back to hit your stop loss. It just ran. Even if you put the take profit, you take 1 trade, 2 trades, 3 trades. First trade, go to take profit 1. Second trade, go to take profit 2. Third trade, take profit 3. If you're doing it that way, then of course, utilizing proper risk management, instead of doing a 3.3, you might have to do a 1.1. You just break it down by 3. So if you do 1 trade, you can utilize this stop loss. I mean, this standard lot size of 3.3, which is $33 a pip. But if you want to take all 3 trades based off of this, and you take profit 1 for 1 trade, take profit 2, is it going to go straight like this all the time? No, it did here though. It didn't here. It only went to take profit 1. So in some of these cases, you'll catch a run. Hopefully you catch a run and you got all 3 trades in, or ultimately you're using the trailing stop, or you see the move and you're manually moving your stop loss. Hopefully you'll be able to take advantage of moves like this, because these moves are going to be the moves that's going to help you stop for the week. You can get your 10 pips here, 10 pips there, 20 pips there. If you do a standard lot size of $30 on 100 pips, that's $3,000. You can be done for the week, or at least 3 days, because the goal is to make at least $1,000 a week if you want to reach that minimum goal of $20,000 a month, which is 20% of your account balance. So if you're utilizing a prop firm and you have an account balance of $100,000 and you bare minimum 20%, which is not minimum, 20% is a lot of money. $20,000 is a lot of money to some people, I guess, anyway. A month, $20,000 is comfortable, I guess. I guess we'll say it like that. For some people, it's a lot of money. I'll be satisfied with an easy $20,000, an easy $20,000 a month. And this is how we'll do it, utilizing the prop firm and the account balance of $100,000 hypothetically. But all you need is $1,000 a day. This trade gave you $3,000 if you ultimately held that same trade, right? Actually, it was more than that, because it's more than 100 pips. It's 167. Let's go to the next one. GA. Scan USD. GA gave us a sell, almost hit the take profit 3. Take profit 2. It's about 50 pips. If you caught the buy on a lower time frame, you could have caught the 10 pips here. But if you caught the ultimate signal off of this buy, it hit your stop loss. You lost about 50 pips on this trade, right? So let's go to the next one. We're not expecting to win every single trade. Here we go. Here's a sell. Sell hit your take profit 1. And that was it. It went sideways mainly. Even though it was going sideways, it was choppy. Look at all of these wicks. All of these wicks. Ultimately, you still caught your 10 pips. 30. It's 30. Through all of this consolidation, all of this movement, you still potentially was able to catch 30 pips based off of the tool. Let's go to the next one. GBP NZD gave you a buy, went almost to 80 pips. Got about 70 pips out of that ultimately, right? Take profit 1, 2, almost a take profit 3. Take profit 3 is 75 pips. So it gave you about 70 pips to the buy. And then after that, it gave you the sell. And it's also in profit. All you need is 10. If you caught it from the zone, there's 100. That's one of those trades again. You could have caught a potential $1,000, $2,000, $3,000 if you're utilizing your funded account. Those are the moves that we ultimately want to hold for. These are the moves that we're looking for. 10 pips, 10 quick pips. You put your 10 pips in the first hour, you're done. Like a lot of these sessions, we want to be done. Unless you guys love the sound of my voice, I don't want to hold you guys up and be up here and have to wait 1, 2, 3, 4, 5, 7 hours to get a move. Look at these moves. Look at this buy. It's clean, straight to profit, 80 pips. And then after that, it gave you a sale, and the sale was clean for 100 pips. GJ, that was a beautiful day for GJ on both sides of the spectrum. Both sides. All you need, again, is 10. 10 pips came in the first hour here. 10 pips came in 3 hours there. At least 10. USD CAD, here's a sale that you ultimately lost. But who cares? Look at that. What? I didn't even see that. Hold on. That was huge. It's 200 pips on UCAD. Yo, yeah, I don't know. I need to check on that because usually UCAD won't even move like that. That's 200 pips on UCAD. So what, you lost 40 pips? You could potentially caught two. If you lost 40 pips and you got into this buy at the break of the zone, the very next hour gave you 50, 60. This hour candle went straight up into profit. We're going to go in the lower time frame so you can see how they're bouncing from these levels. But let's keep scanning real quick. Sell, invalid. No, actually, this was previous zone, but that was yesterday sometime. That sale was invalid. But look at this buy. This buy as of yesterday, straight to profit, 60 pips. USD/JPY. Buy, straight into profit. Came back to the lower of the zone. You could have caught these moves from the lower of the zone back into profit. All you need is 10 pips. There's two potential setups in there to catch 10 pips on the lower time frame. After you caught 50. Go to the next one. AUD/USD. Everything is on the hit list. The buy gave you at least 25 pips. The sell gave you at least 30, 40 pips. Your buy, AUD/JPY, gave you at least 60 pips. The sell gave you at least 40 pips. Clean buy, clean sell. Where you selling? Do you want to sell a buy in the zone? If I took the zone out, you wouldn't even know the zone was there. You wouldn't even know the zone is there. You wouldn't even know. People are getting caught in the trap, getting caught in the zone, don't even know if it's going to buy or sell. Once you turn the lights on, though, you understand how to utilize the zone. If it's above the zone, we know we're buying. If we below the zone, I know I'm selling. I know that much. And if it wants to retest, if I'm already selling and wants to retest the zone, I can get an even better entry from here or way up here because I understand how to utilize the tool. Let's keep going. AUD/NZD. Buy. Here's one of those opportunities here from understanding the tool. We're already buying, right? We're buying from previous day. And I'm going to go into that in our training sessions. Notice we're in the downtrend. I can tell by the downtrend based off the zone. The zone is getting lower and lower, right? Now the zone is higher than the zone. It's ultimately an uptrend. If we're going up, what do you want to buy from? If we're buying, if you look at this move, we're buying. What do you want to buy from? You want to buy all the way up here and get caught in this trap? Or do you want to buy from down there? Where do you want to buy from? The lows. Is it telling us to buy? It told us to buy up here. It told us to buy here, but where do we want to buy from? Ultimately, we want to buy from the lows. Being that it never broke and closed above the high, I want to look to buy at a break. It's already going to pull back. Where's it going to pull back to? Hopefully, it pulls back to the low of the zone. So I can buy from here. Pay attention to AUD/NZD. If it doesn't break this low, if it doesn't give us a sell, and we get a buy on AUD/NZD later today, and the buy, because it's breaking our zone here, it's telling us to buy from here, would you rather buy from the high or buy it from the lowest point possible? There you go, UJ. These signals right here, those signals that are coming in, is just my just to alert me about certain setups. Those are 3-minute alerts. It just gives me an alert that UJ is now below the zone on a 3-minute candle. So we're going to watch on that. Pull it up real quick so you see what I'm talking about with UJ. Right now, look at the zones. Sell, sell, sell. Now we got a higher zone. This zone is also higher as well. So we're looking at ultimately an uptrend, right? So if you wanted to trade the market, again, you want to sell from the highest points possible or buy it from the lowest points possible. Where's the lowest points possible? As of right now, your lowest points possible is the lows of your zones. This is the low. Here's a low if you want to utilize these wicks, or ultimately the low of that zone from the previous session, or this low from this zone, right? If you want to buy, we want to buy from low of the zone. That's from a higher standpoint. You always want to utilize your technicals, your top-down analysis to overall see where the market is going. But on our sessions, ultimately we want to get in and out because, again, all we need is 10 pips. But if you're looking at USD/JPY on the long term, you just trap it. If it starts breaking, this is ultimately going up. You got the lows, you got the shoe pattern. It breaks market structure here, gives you a higher high here. and it's breaking a low. If this is the ultimate low, this is a higher low. So that means it's starting to break market structure. Right now, after this major bullish movement, you got some bearish activity. This is nothing but an impulse into a flag. You don't want to get caught in the trap, right? So you got to find your levels of areas of interest to where you want to know ultimately buy or sell the market. And we want to sell from the highest point or possible, or buy from the lowest point possible. Right now, USDJPY on the 1 minute chart is breaking our zone. It's breaking our zone. So when you're utilizing the lower time frames, we're scalping. Again, all we're looking for is 10 pips. So a monthly chart really doesn't matter. I'm not saying it don't matter. I'm not throwing no jabs to the long-term traders, the swing traders out there. It definitely matters. All time frame matters. Right? All lives matter. But when you talk about the lower time frame, it's been set up so I wouldn't even look at the 4-hour chart. I wouldn't even have to look at the 1 hour chart if I'm focusing on the lower time frames and the higher the lower the zone. I'm down to the 5 minute, 15 second. The highest I'll go is a 15 minute. That's me though. And as we go along in these sessions and you get access to the tools, if you want to be a scalper, you may find yourself doing the same thing. Hopefully you'll be getting great results with it as well. But we're going to go over that briefly as we move along this session. But as you can see now, this is an ultimate sell from UJ, small sell from UJ. The minute chart, the sell went down 3 pips, pulled back to the zone. If you take the sell back out of the zone from the entry, it went down 3 pips, right? All we're looking for is 10. All we're looking for is 10. So where do we want to sell the market? If it never comes back up into the zone, right? And I want to find my points of interest first. Our points of interest, if I was to take the sell, right? I have points of interest as the market moves down. Where's my ceilings? I have a ceiling here. It stopped, came down, respected, went low. That's a ceiling. That's my resistance. That's my point of interest, right? I have another brief stop here. I can utilize this as well as a point of interest. Ultimately, if I take this trade, my stop loss is way up here. So this is how you utilize the lower time frames to minimize your risk. So if I was to take a sell on a minute chart, I don't have to risk 40 pips. If I'm expecting this to sell from the zone and stay below the zone, I can use areas of interest as my stop loss. So if I use from my entry to up here, if I risk up here, it's only 7 pips. So if now I'm only risking 7 pips on a trade, I can use a standard lot size of $140 a pip. And if I get 10 pips, I will make $1,400. All you need to reach your 20% goal is $1,000 a day. Being that if I take this trade and I risk this trade at 7 pips for my stop loss, and I get 10 pips out of this trade, right? I earn a potential $1,000, $1,400. Am I saying that is going to happen 100% of the time? No, but at least I was able to lower my risk. In a sense, you're still going to risk $1,000. Like if you want to up your lot size to make sure that you make more money, if you do lose the trade at 7 pips, you're still going to lose your $1,000, right? But if you do catch your 10 pips, you make a lot more money, being that you use the higher lot size. So that all depends on the trader. If you use it in the 7 pips, you don't have to up your lot size. You can use the same lot size, but now you're losing. If you do lose the trade, instead of losing $1,000, you may only lose $300. Hopefully that makes sense. So it's either you want to up your lot size to make more money, or you keep the lot size the same and you use the lower stop loss, and you just, if you was to lose the trade, you're losing less. So it's however you decide to choose. But ultimately, if I was to take the sell, where should I sell from? Do I sell down here? Or can I sell from up here? Because these are my areas of interest. If it does come to this area, I can find a sell from here, and now my stop loss, if I catch the entry from here, now my stop loss is 4 pips instead of 7 pips. Hopefully that makes sense. But we're going to find areas like that. We're going to see setups like that during the live sessions. Ultimately, we can't predict or force the market to give it everything that we're looking for over time. But I'm going to do a brief scan real quick while I want to make sure that we don't miss that. I don't think I got alerts on everything. So I'll just do a quick scan to see Notice our zone. Notice we had our zone. Now we got our zone. We got the high to zone, low to zone, right? We're waiting for the break above the zone, retest the zone to go higher. If it doesn't come back down here, our only option is to buy from the zone, right? Because the zone still works, even though it, in a sense, is still buying from the higher zone. But if you catch the break of the zone and it retests the zone, you can catch it from here. It may never pull back into your zone. If it does, it may just give you another re-entry. Hypothetically, that's if it buys. But being that it's in the zone, I'm not paying attention to it. I'm only focusing and looking for pairs that is near the zone or breaking the zone. Here's one that it didn't break the zone, it didn't close below the zone, but it wicked below the zone. So that's Euro JPY. We'll pay attention to that. And like I said, we can't naturally force it. There may be there's been sessions that will be 605 by 605. Like 3 or 4 assets are already breaking, and we're catching the trade and done before 6:30. But we can't naturally force the market, so we're just going to scan and see. Here's another potential on GJ. Let's look at it on the 15-minute, see what it's been doing. Ooh, look at that sell. Look at that sell on GJ, man. Ultimately, look at that sell on GJ. How many pips was that again? That was a huge fall. It's like 200 pips, right? From the top of the zone. Usually, for the Fibonacci traders out there, if we're ultimately expecting a pullback, we may get a nice buy on GJ. Just for the retracement purposes, based off of this. And ultimately, I'm not saying, I'm not a financial advisor. I'm not saying that it's going to buy up or anything like that, but just seeing how this move happened, we're in retracement mode right now. So if it was a retrace and was to continue to buy up, where should we buy it from? Where should we buy it from? Should we buy it from up here? Retail traders, they got buy stops all the way up here. If it wants to buy, it's going to activate my buy stop, put me directly in the profit. In some cases, that will work. But if you want to minimize your risk, do you want to buy from the high or buy from the low of the zone? That's where this tool will come into play. Once you understand it, back test it, use it, you will be able to see the market, understand the market. And as you're going through some of the trainings that we have available in the community, right? Shout out to the Market Rhino for a lot of the trainings that he's been putting together for the community in here. But if you want to buy this market, ultimately, if it breaks above this market, retest this zone, and it continues to go upward, then we're buying it from up here. Do we have to wait for it to go all the way up there, though? If we can buy it from a low point of the zone, look where it's at right now. It looks like a shoe wedge candle, a shoe wedge pattern, higher highs, breaking here. I would see this trend. I would box it in. Now it's trapped. It has to be one of two things. It has to either break below this low and show us that it wants to go below the ultimate session key zone, or it has to show us that this may be the low of the zone. It may ultimately break to go higher. If that's the case, if we're anticipating the buy, where should we buy it from? Where should we buy it from? The low of the zone. It's at the low of the zone right now. It's starting to respect the low of the zone. So if we're looking for the longer term trend of the buy, that's for the swing traders out there. This could be a good area to pay attention to. If it sells on this zone, because we are looking for sales, where should we sell it from? This is where your points of interest starts coming into play. Because if we're scalping now, and we're looking at this sell, our stop loss is at the top of the zone. Stop loss is up here about 40 pips. Where are we selling it from? We're selling it from the bottom of the zone. So if we sell in this market, we will be selling in this candle. You have to pay attention to your areas of interest, right? Which is this low. You want to make sure it breaks that low. It's already below the zone, but to stand clear of the trade, we want to at least break this low. Do you want to wait for it to break the low to get this to sell? That's what the retail traders usually do. They usually wait for it to break the low. You're not supposed to sell at the low. You're supposed to sell at the highest points possible. Right now, our areas of interest is here. And there. And then ultimately, the top of our zone. So if it stays below the zone, we know we're in seller's territory. On the minute chart, I'll show you guys what I'm talking about. This is GJ, right? Let's go to GJ. When was it? Earlier today. Let's go to Let's catch up on this sale on GJ. I'm gonna show y'all how it looks on a lower time frame. Where is it? Look at that sale. This is a minute chart, right? It's a minute chart. Minute chart. It's not 1 month. That's a minute chart. Look at the sale. I believe this is one of the trades that came early in the app. This was yesterday, I believe. But look at the sale and look at the retest. It never came back into the zone whatsoever. So in some cases, the highest point possible is the bottom of the zone. Got the sale, you got your retest. And it took off. That's a good 80 pips from the zone. Even if you closed out downhill, even if you close here, that's you got your 10, that's 40. If you held it, you could ultimately put 100 pips. It kept going. It kept going. That's crazy. It's 200 pips on GJ. So notice on GJ now, we're ultimately out of the zone, under the zone. We're getting a retest of the zone like we did just as I was showing you before. We're selling. We're selling. This is our entry. Our entry is now in profit off of this sale. If we had to quote it based off of this entry, we're in profit. So right now we're noticing this pulling back to the zone. This is where I'll get, okay, we're in the zone again. So if we're in the zone, we want to make sure it protects and it respects our areas of interest. As long as it doesn't go, ultimately our stop loss is way up here. So if we was to take the sale, our stop loss is 40 pips. As long as it stays, it doesn't go above the zone, we're still in the clear for a sale, right? Ultimately, if it stays below the zone, we know we're in profit if it's under the zone. If we're ultimately selling, our stop losses up here, that's 40 pips. If you want to, again, minimize your stop loss, then you can use other areas of resistance. So we just pay attention, we just watch it, and we wait for it to give us a good indication that it wants to stay under the zone. This is why we get dangerous with it, and we go down to the 5 second. You want to look real time. Here's real time. Right now, real time on the 5 second chart is under the zone. If you wanted to catch the sale and it's coming back into the zone, there's the sale. If you wanted to catch the sale while wait for an hour candle to close outside of the zone, if it starts coming out of the zone on a 5 second chart, a minute chart, 3 minute chart, 5 minute chart, you're now getting in early. So it'll be cases on some of these sessions, some of the sessions that we had and some of the trades that we've taken to where we find the entry on the lower time frame to get in early. And if we got in this trade right here, this sale, say hypothetically, we get in this trade, and just like we utilize this red line as our point of interest on the sale, on the minute chart, if we was utilizing this time frame and it's breaking below the zone and it stays below the zone, our area of interest is now here. Right? So if I took this sale out of this entry, this is hypothetically, but y'all might think this is crazy, but we actually take some of these trades. This is a 3 pip trade. It's a 3 pip stop loss. If I'm expecting it to stay under the zone anyway, right? I'm expecting this trade to stay under the zone. It's 50-50 chance. It's either going to stay under the zone or come back in the zone. If it comes back in the zone and hit my stop loss, so what? I lost 3 pips. So what? If it stays under the zone, though, I know I'm in profit. And this trade may run on a higher time frame and give us a sell. It may eventually go into the hour time frame and give us a sell. Right now, it gave us a sell on the minute chart. We're starting to see the picture early. It's painting the picture early. A lot of people at first, when we was using the tool, we was focused solely on the hour chart, solely on the hour signals. When I started breaking it down and going through some of these back testing with some of our traders, we noticed that lower time frames are very, very potent. Even the structure or market structure on a lower time frame, market structure is the same. Shoe wedge pattern is the same. The harmonic patterns, all of your M patterns, W patterns, all of the market structure technicals that you utilize on high time frames, you can utilize on lower time frames as well. It's just the trade on a lower time frame is short-lived. Instead of the trade giving you 50 pips on an hour or 4 hour, it might only give you 5 pips on a minute chart. But the market structure is still the same. Notice you got an impulse move to a pullback into a zone. If it wants to break this channel, Notice we're still going down for the sell. But if it does want to buy, it has to at least break what? Market structure. Where's your market structure? Your trend line. We're on a minute chart, but the rules still apply when it comes to market structure. So if it doesn't break this trend line and it stays on the downtrend, it's going to show us that we're on the downtrend. We're going lower. So our entry on this minute chart is in profit. What are we looking for? 10 pips. Right now it's at 5. It went about 5 pips. So we're halfway there, ultimately, on this sell that we could have caught based off of this sell signal. And then it even gave us a better entry when it pulled up. Or ultimately, you could have caught another entry and pulled up. If you missed the entry when it pulled up, you at least selling from when it breaks below the zone again. Came back to respect the zone. If you missed all of the other entries, as we were talking about it, that was the entry. When it pulled back to the zone, you got into the sell again. So you could have caught multiple entries to get you 10 pips, but the market definitely on a lower time frame. If you missed the train a couple of times, it's going to circle around to give you another chance. You missed the first sell ultimate signal, pulled back, broke again, missed this sell entry. Even though it's still lingering, it might not hit to take profit yet, but these are opportunities where you could have gotten into the market based off of this small scalp of a sell. And I'm not saying that JPY is going to sell. It's not 100% guarantee this thing is going to give us 10 pips, because on a higher time frame, again, we were looking for a potential bounce from the bottom of the zone. So if it has to get to this bottom of the zone, we're looking for a bounce. That's from the sick. That's a signal earlier. Now it's at TP. That was from earlier. But if we're looking from a bounce of the zone, look where the zone is at. The zone is down here. So if we're on a lower time frame and we're expecting a bounce, we're expecting it to go lower. That's me anyway. That's my technicals going through it. But I do see a bounce coming in GBP JPY longer term. But we're not focusing on the long term if we're scalping for 10 pips. So let's do a brief scan again. I want you guys to kind of see some of these moves. Let's go back to the 5 minute. Whew. All right, so here's in case scenario, you got to sell, right? Sell. You sell, your stop loss is up here on the sell. Where should you sell at? Ultimately, your ultimate signal is from the zone, right? But retail wise, do we want to trade at the low, or do we want to sell from the high of the zone? Look at that. Retest to the high. You take the session key off for a minute, you would have had no idea it was going to stop right there. You would have had no idea. Unless you utilize technicals and you got your zones, your order blocks. I see it right here, right? I see it just from looking left. But if you didn't have the session key, you didn't understand order blocks or supply and demand areas. So a lot of people would have seen this buy and they're jumping in. Everybody jumped into this buy, hypothetically, right? Look where it stopped at. Why do you think it stopped there? Why do you think it stopped right there at the zone? Because the zone is very important. That's why we stress the perfect entry. This is your perfect entry at the top. It's telling us to sell. It's not telling us to buy. Nowhere on this chart until later, right? We're going to get to that. But it's telling us to sell. You can ultimately sell from here and risk 40 pips. You can sell from down here, all down here, right? And risk 40 pips. It never hit your stop loss. I don't think. Did it? Yeah, it did. Eventually it came up and did. Did you get at least 10 pips from it? Did you get at least 10 pips from it? This is your entry on the sale. Did you get at least 10? There goes your 10. Real close to it, right? That's about 10 pips right there. So even if you did sell from the entry, you still caught the 10 pips. But do you want to sell down here, the entry, or do you want to sell at the very high? If you sell it from up here, your stop loss could be 5 pips, 3 pips, 1 pip. Look, it never went above the zone. It's selling. At this point in time, it was selling to go below the zone. The sell was short-lived because it's a 5-minute chart. But where do you want to sell? When it pulled back up here, this is the ultimate entry for the sell. Here's your buy. Your buy came in. And here's one of those cases where you will get a buy and it never came back to the bottom of the zone. Ultimately, you do just like we bought from the high up here, you want to buy from the low. Could we even get a chance to buy from the low? No, we didn't. But we could have buy out the zone and look at the retest of the low. Let's go down to the 1 minute. Catch it. Hopefully we can catch it. Where's it at? There you go. That retest is beautiful. So we don't naturally know when it's going to give us that optimal entry. That's the optimal entry. If it does give you an optimal entry, then you know you're getting in the trade super early if you can catch it from the bottom of the zone and then it buys up and then it breaks the zone and give you a whole nother buy entry. You'll be done with the bottom entry, your optimal entry, or if you want to hold it, you can catch it for the long-term move. Well, ultimately, we're looking for those optimal entries, just like we did back there on the sale. Even notice here, you caught it, it came, eventually broke, but notice where it stopped at again and gave you another 10 pips from the rejection of here. So even after you put the first sale, let me go back one more time so you guys can see it. The first sale that gave you the 10 pips, it came below the zone, selling below the zone, selling below the zone. It came back to the top of the zone. I would have sold again right here, caught my 10 pips. It was short-lived. His market structure being broken, so it was short-lived. Still caught my 10 pips though, right? It breaks above the zone. Now that we're looking for buyers' opportunities, where do we want to buy from? Look at the retest of the high of the zone. That's where your technicals come into play again. Use your trend line. Respecting the zone, respecting the zone, respecting the zone, breaking the market structure, you get back into the buy. And it takes off. 400 pips. Let's pull another pair up randomly. Let's just pull up. Let's go to the 5 minute again. Like I said, it was out of like 15 setups, man. All of them hit take profit, at least take profit. One. Look at Euro NZD. Let's go to the 15 minute. All right. Let's go to the 5 minute. I'm still looking. Oh, man. Let's pull up UJ real quick. GJ, entry. That's the official sell signal on the hour chart, which means GJ should be in profit. On that minute move that we saw. Oh. That entry, did it give us 10? We close to it. It's about 8, 9 pips. We got close to it right there. Might have caught our 10 right there on GJ. GJ. And this is just a warm-up, guys. This session today is a warm-up. Naturally, we're gonna be sending out these trades. I just wanted you guys to see the value because there's a lot of people that are new on this session. Shout out to you guys that are with us today. I'm not going to hold you guys too much longer. We're going to naturally go through some setups. This GJ was a beautiful move. It stagnated a little bit, but it ultimately gave us 10 pips. Let's go to UJ. I think UJ is doing the same thing. That was an easy 10 pips on UJ. Potential 10 pips right there. It's 9.8. But it's early. We're early in the market. I believe GJ just gave us the entry. It's selling sell on the minute. It's telling sell on the 15 minute. It's telling us to sell on the 30. It's telling us to sell on the hour, I believe. Nope, it's not. So being that it's not even telling us to sell on the hour chart means we got in early. Expecting to bounce right in there. Zone to pay attention. If we was to sell, we're going to pay attention to this zone, right? Sure. 1, 2. But if we catch the sell on the hour chart, by the time we catch the sell on the hour chart, if we getting in on the lower time frames, we're done. Sell on the 15 minute came in. Zoom in so we can see what we're looking at. It's a nice sell. It's Nice sale. That was a nice one right there, you guys. It's 10 pips, easy. Easy 10 pips from the bottom of the zone. And so came back into the zone, and all it did was give us our areas of interest, gave us our trend. So as long as it's respecting market structure, it's not breaking market structure, staying below not only the zone ultimately, as long as it stays below the zone, our entry's here. As long as it stays below the zone, we in profit. If it does come above the zone and it starts getting to these areas of interest, then we want to pay attention to it. Ultimately, our stop loss is at, we got another area of interest here to protect it. So even if it did pull back and it starts stalling from here, we're still safe. We're still in the sale. It's not above the zone. It might be in a little bit of a pullback inside of the zone, might be even a little bit of drawdown. It's only about 5 pips though. Look, it's only about, I think, what was that? From the entry to that high point, it's about 15 pips. It's not bad, right? 15 pips on that trade. Could have did a stop standard lot of $60 a pip, $66 a pip, $66 a pip. You're up 16 pips, right? 66 times 16 is what? Let's pull out the calculator. That's $1,000. You're already at your $1,000. You can close out right now, even if it's not at 10 pips. You're at $1,056. You can close out. Done for the day. We're done. It's 7:09. We can be done for the day. And if we can do that consistently, it's not going to happen all the time like that. But if we can do that on a normal basis, at least 2-3 times out of the day, you don't have to suffer and force yourself into the market hours and hours and taking away from your natural dreams or taking away from your families because you're watching the charts for hours and hours. You're done. It's going to be times we'll get to the session and I'll be like, you guys, we got our 10 pips. I love y'all, but we've been 10 minutes. I'll see y'all on the next session. I'll see y'all in the chat. We're done. Why force it? Look, it's still going. You got your 10 pips and more, right? That's GJ. There's your 8. That's 18 now. It's at 18 pips now. 20 pips now. Do y'all see this? Hope y'all seeing this. I hope y'all seeing this. If y'all see, I like what y'all see so far. Let's get some 777s in the chat. Look at that. That's GJ. Guess what? Look at UJ. UJ did the same thing. Look at UJ. Done. We're done. It'll be a beautiful thing to be able to get on a quick session with the team. Get on a quick session. We family. We're gonna be family on these sessions, man. Because we're gonna break some barriers financially utilizing these sessions, these tools and these signals. But as y'all can see, potentially, that was a potential setup. We'll be done right now. 7-Eleven. You can go to 7-Eleven and get your finest coffee. For the coffee drinkers out there. We'll be done. QJ, let's scan. Let's just see what the market is giving us right now as we speak. Euro USD still in the zone. Euro CAD still in the zone. I got Euro CAD trapped though. You got to do two. Well, there's always going to be a trap. The zone is the trap. You can trap every market because of this zone. You might not know what it's going to do, but it's going to tell you eventually, and it's going to start telling you on the lower time frame. When I used to tell people, sell entry hit on Euro JPY. Done. GJ, UJ, and Euro JPY, all 20 pips. That's 40, a potential 30 pips. If you caught your 10 pips, you caught 10 pips on 3 trades off the 1 minute chart. 10 pips. We're already done. We have 30 pips for the day. 30 pips. So if we're trading on this standard lot size and we're doing 3 trades, right? So if you did 3 trades, that's what? That's $22 a pip, right? $22 a pip times 20 pips. Whoa, let me clear that. $22 a pip times 20 pips. It's 44. I should have known that. I'm great at math. That's $440. Times that by 3 because you took 3 trades. You got your $1,320. You're done. You're still done. For 3 trades. Now, if you did your 3 trades on the initial lot size, you'll be up $3,900 right now. in an hour, 15 minutes. The power of using an account balance size of $100,000. So don't let the standard lot size of 6.66 scare you. Don't even let the number 6.66, the 666, they lie to you. It's still an angel number. It's got to understand the natural code of it. But don't let the lot size scare you. You're risking 1%. It's okay to trade a hot lot size if you have a $100,000 account balance. We just wasn't used to it because that's not how we started. We didn't start like that. We wasn't taught to trade like that. We were taught to trade like retail traders, to sell when it breaks the high and to buy when it breaks the low. This tool, once you understand the basics, is not to sell at the low when it breaks the low. You want to wait and it activates your sell stop. Only way you do that is if you're using this tool and you're using this low as your sell stop. That's the only way. Ultimately, you want to sell from the highest point possible and you want to buy from the lowest point possible. And this zone will give you that. It will give you that. I'm gonna find a nice example for you guys real quick. Hold on. Let me do a brief scan so you guys can see what I'm talking about. Let's see if we can find one. Oh, let's see if we can find one. No, that ran. A lot of these ran. Hit on TJ. There's your sell, retest from the zone, took off. If you missed the first sell, there's your entries right there. If the zone wasn't there, you would have not. If the zone wasn't there, and people seen this market, they would have been buying all in here. Buy. Their retail traders are buying. Why are they buying? At the zone. It's supposed to be selling. It's selling. Why are you buying up here? You're supposed to be selling from up here. Sell at the high, so you minimize your risk and you get straight into profit. Trying to find an optimal entry for you guys. It doesn't happen a lot. It happens often. It doesn't happen all the time. But I'm gonna here we go. Here's one. I think we went over that. Naturally, we're selling, right? We're below the zone. We're below the zone. We're selling. Look where it came back to. Came back to the, let's zoom in so you guys can see this. 1 hour chart. I believe we went over this. I'm not sure. Or maybe that was with the team earlier. Naturally, we're selling. We're below the zone, right? We're below the zone. We got our 10 pips. We're selling. What do we want to sell at? Here. Now, of course, we also got to factor in this can break above the zone and go higher. If it breaks above the zone and go higher, where do we want to buy from? There or here, right? But did it break above the zone and go higher? It didn't. It broke back below, right? So again, where do we want to sell from? If you get it at the high of the zone, that's your optimal entry. Look at that entry. If I had took the session key off, that's the perfect entry. Stop loss is 3 pips. Reason why I can use a stop loss of 3 pips is I'm selling from the very high of the zone. I'm anticipating it to sell like it was previously. I'm anticipating it to sell from the top of the zone and break below the zone, right? If I'm anticipating that, this is the best time to get in for the sale. Why would I wait for it to get way back down here to start selling if I can sell it from way up here? Whoa, what happened? If I can sell it way from the top of the zone. I don't know what happened to my chart. Let's see if I can get it back. Candles disappeared on me. They down here somewhere. I don't know how they got down there like that. That's dope though. I need to go back to that. But anyway, I don't even know what pair I was on. I think it was Euro NZD. Must have been another pair. All right, so let's keep scanning. Let's keep scanning. Let's see if we can find something real quick before I let you guys go, because a lot of these pairs haven't even set up yet. EJ hit take profit. EJ hit take profit. A lot of this stuff is still in the zone. Notice right now, Euro NZD, where is it at? Where is Euro NZD at? It's at the top. of the zone. Do we know what to do yet? We don't know whether to buy or sell because it didn't tell us to buy or sell. Do we know, is it going to go above the zone? We don't. Is it going to go below the zone? We don't. If I was to take this buy right now, if I take this buy anticipating it to go above the zone, these are your two trade opportunities. You're either going to buy Euro NZD for the next 4 hours or 24 hours, or you're going to sell Euro NZD. I'm going to give you two options based on this zone. Do you want to buy it right now? If you was to buy this market on a minute chart, buy it from the top of the zone because you're expecting it to go up. It breaks above the zone and retests. If you buy it from up here, right, your stop loss is 20 pips. It's not bad, not bad trade. You're anticipating the buy. Notice what's happening right now. I couldn't even get to it before it moved. I would much rather, instead of buying it for 20 pips, I can sell it from where it's at right now. This is a real-time trade, right? Selling it from where it's at right now, and my stop loss is 1 pip above the zone. If I'm anticipating the sell, if it breaks below the zone, this is the highest point to sell it from, right? So I'll sell this and risk 4 pips, 5 pips, instead of buying it from here and risking 20 pips. Hopefully you guys are catching on to it. Look at where we're supposed to sell from again. Somebody say in the chat, where we supposed to sell from again? There's another potential trade from the high of the zone that went straight into profit. We almost had 10 pips. It didn't tell us. This is for the manual. Once you understand the tool and we on these sessions and you follow the trainings and the strategies and you kind of understand the technicals behind it, or at least the technicals in the market, and you intertwine what you know, your knowledge with the tool, you'll be able to catch these manual trades. Because as you can see, it didn't tell us to buy or sell. These are one of those manual trades that we could have got in either live or utilizing the tool. You could have got in and caught this trade from the high of the zone and caught your 10 pips. If it gets back down here to where it stopped from before, just like as it's doing now in real time, you're going to get your 10 pips. Almost. It's 11, about 10 pips, right? All you need is 10. If your lot size, if your stop loss is 5, let's go back to 5. Your stop loss is 5 pips and you risk 2%. Let's get a little, we don't want some money today. Let's risk 2%, right? 40 standard loss. That's $400 a pip. People will see that and would, I ain't mean to get graphic. I was going to say piss on themselves. $400 a pip. It's not normal unless you're using an account size of $100,000. Having it $100,000 ain't normal either. The people that have high account size balances, they use high standard lot sizes because all they're looking for is small moves like this. And they're done. I say 10 pips. Some people only go for 7, 5. If this was $400 a pip and you caught it from the high and you caught it to where it's at now, which is at 8 pips, right? 400 times 8 is what? $3,200. You're done. There's your 10 pips. From the high to zone. Sell from the high, buy from the low. Do people know that this is the low? Do people even know? It's not even down here yet. Do people even know that this is the low of the zone? If you took off the zone, they wouldn't know that this would be the low. They would think this is the low. Judging the 1 hour time frame of what we see on the chart anyway right now, people won't even know that this is the low unless they have the zone. The people that are connected are fortunate enough to have the tool. So if you want to buy, right now it's not telling us to do nothing. But if you want to buy, you want to buy from down here. If it goes up and it buys and gives you 20 pips and it pulls all the way down here and it's rejecting, oh, this optimal entry where you can utilize that 5 pip stop loss and that 40 standard lot size because you caught an optimal entry. Does the optimal entries happen all the time? Not a lot. They do happen often. You just don't know when it's going to happen. I saw a beautiful setup. When was it? What was it? That's another session. We have to do that probably tomorrow. There's another one. Where do you want to buy from? The bottom of the zone. Where do you want to sell from again? This is GBP NZD, similar to Euro NZD. It didn't tell us to buy, didn't tell us to sell, but look at the rejection at the zone. If you wanted to sell, where should you sell? Do you want to wait for it to break down here and start telling you to sell all the way down here? Or do you want to risk less and sell it from way up here? There's your 10 pips. Easy. DJ, whew. We went over that one. UCAT, still in the zone. UChef, I don't trade those. That was a beautiful trade on UJ. That was beautiful. Hopefully somebody saw that and caught it. AUD in the zone. We ain't even talk about AUD JPY. I guess JPY pairs, man. All of them gave us our 10 pairs. Take profit one is 20. That's 40. That's four trades we could have potentially took, right? Today's warm-up session, you guys. Hopefully you guys are not bored. I'm not going to hold you guys too much long, but naturally during these sessions, we're going to warm you guys up to understanding the tools. That way, if you're using the tools, you can see it and watch along with us. Therefore, you can make the best decision possible for you. You're not solely relying on just me, my voice, right? Because I am not a financial advisor. And you got to understand within the disclaimer, I don't have a crystal ball in front of me. It might seem like it sometimes on these live sessions, but I don't. I can't predict the market. And your risk value and your risk appetite is totally up to you. So hopefully, once you understand how to use the tools, you become comfortable with the tools and the signals, you'll be able to make the best decision possible for your account. But a lot of these are still in the zone. It's still in the zone. So if you're fortunate enough to have the tool, all you got to do is just pay attention and wait for the break. There goes another one. There go that GBP, that JPY pair again. I didn't even get that far to get down to NZD. There's 20 pips. Easy 20 pips. Look at the pullback. Look at this pullback. That's the one pullback, two pullback. I guess you can call those pullbacks, three pullbacks, 20 pips. These pullbacks are not pullbacks. They were just rest stops, I call them. It didn't pull back at all. It just stopped for a minute and kept going. Stop for a minute. Next. Again, minute chart, you're done. 10, 20 minutes, you're done. That's 5 setups that we could have caught today live. And if you had the tool, hopefully you caught it, right? Hopefully, even as we was going through the session, I believe we did briefly go over UJ and GJ as it was breaking. But I wasn't anticipating to go full throttle and giving these live setups. I just wanted to warm you guys up just so you guys can see the possibilities of the tool, see some of these setups live in action. That way, when we start trading live, you're not second guessing yourself and then you miss the move. Again, we're on the minute chart. You ain't got no time to waste. If we're breaking a level on the minute chart, you got about 30 seconds to get into the market. We ain't got time to waste because it's going to give us hopefully 10 pips in 20 minutes. So do you want to wait for it to get to the low and decide that you want to get in now? Again, this is a minute chart. If I get in on a 15-minute chart, the sell signal was here. It still gave you, fortunately, you got in early. If you're waiting for the conservative signal on the hour chart, conservatively, it still got in. So even on the hour chart, it did give us a signal. That's a good thing. Sometimes sometimes you might go to the hour candle and it won't even have the sell signal yet. But it being that you got in early on the minute chart, you were already in your 10 pips of profit. So these live sessions will definitely be a roller coaster ride. Hopefully, we'll have a more fun than taking losses. I'm expecting losses. I want you guys to be, I'm transparent with you guys. There's going to be losses. Hopefully we catch those losses. It was only 3 pips. So what? Like, damn, I lost. So what you lost? It was only 3 pips. We about to catch 20 on the next 2. Hopefully, right? Potentially. And as you can see with this tool, I'm going to do a quick rundown. Where we at? This is NZD-JPY. So this is just like random pair. I'm going to go to 3-minute chart. I like to use the 3-minute on a lot of these. Let's go here. I believe I went through this with the exclusive group last week. I want you guys to pay attention to these entries. Okay, here goes a perfect one right here. NZD-JPY. Right now, ordinarily, I'll just trade Euro GBP pairs and the JPY crosses is the trades I focus on, right? But when you got NZD, well, it is a cross, but NZD pairs, AUD pairs, I really don't trade as much, but this tool works on all pairs, right? But notice here, this is a perfect opportunity and a perfect example where we talk about optimal entries and utilizing this zone to get your low risk, high reward trade. Notice we caught a sell, right? You see the sell. It's telling you to sell out the zone. Do you see a buy anywhere on the screen? It's not telling you to buy anything. So when it came to the high of the zone, let's move real quick. Let's move that. People got buy stops, retail traders. They're seeing this consolidation phase. People got buy stops all in this area. Buy stops, buy stops, buy stops. They're buying. People are buying all of this. They're seeing this and they're buying and getting caught in the trap. Who knows that it's a trap? The hedge funds, the smart money knows it's a trap. That's what they want to do. In order for the smart money to move all of these hundreds of millions of trade orders, because they got to break the orders into multiple orders. In order for them to fulfill the orders, they have to, and they want to sell. In order for them to sell, they have to sell it to somebody. Somebody has to be willing to buy at the high. That's why they want us to be retail traders. They want you to buy at the high so that they can fulfill all of their orders and close out on their sale. That's why, because they're the only ones that can move the market like this. But unfortunately, retail traders are buying at the high, buying at the high. How do we know it's the high? Session key. Where are we supposed to sell at? Somebody answer in the chat. Where are we supposed to sell at again? The high. Look at these retests to the high on a 3-minute chart. Look at these retests to the high. 1, 2, 3. If you missed the first one, second one, there's the third one. Guess what? Even if you're scared and you're unsure, because it's a lower time frame, you throw in your technicals. It's telling you to sell anyway. Where should you sell? Up here. If I'm selling from up here, what is my stop loss? If I'm selling from up here and it makes this candle move down, what is my stop loss? My stop loss is above this wick right there. That's my stop loss. So I'm entering this candle here. My stop loss is up here. I minimize my risk because I didn't wait for it to sell. Even if you did wait, we're going to get to that, to waiting for the conservative of breaking this sale. This sale is still valid, but why do you have to wait for it to sell down here when you can make the ultimate decision of selling it from the high and your stop loss is only 2 pips? I can risk 2 pips. If I'm wrong, the only way I'm wrong is if it breaks above the zone. Did it ever close above the zone? Never, never. So if it's not breaking above the zone, I'm in the clear, straight in the profit. Broke below the zone. Notice it broke below the zone. Where did it retest at? The zone. So even if you miss the optimal entry at the top, there's the conservative entry of the retest at the zone. People saw this market right here, and they started buying. They started buying and got caught in the trap all over again. How did we know it was a trap? The zone. Look, it stopped, it winked, it even winked and tried to fake people into this, closed below the zone. It took off. I mean, took off. Lord have mercy. 100 pips, easy. 150. 200 if you quote it from up here. How many pips are we looking for again? Somebody answer in the chat. How many pips are we looking for? If we utilize these large account sizes. Y'all still with me? How many pips we looking for? 10. That's it. Here we go. Y'all still with me? 10. It's 150. No sweat. Especially if you quote it from up here and your stop loss is only 3 pips. That's an easy trade. You can walk away on this trade. I can walk away. I can turn the computer off on this one because your stop loss is only 3 pips. Who's sweating over 3 pips? I know I don't sweat over 3 pips, but that happens when you catch those entries. Those entries happen all the time. They don't. But that's the great thing about the tool. When you see those entries, you can load up. You can load it up. Let's see if we got something. Let's see if we got something. Euro USD is starting to make a little bit of a movement. It's going near towards what? The lower zone. So pay attention to euro. The euro pairs, I guess, well, Euro USD. So let's see what's going on. Go back down. Let's go to this Euro NZD trade after the first retest. Guess what happened again? After the first retest, 10 pips, guess what just happened again? We missed it, a little late. Again, where we selling from? It ain't telling us to buy or sell nothing. So this is manual trading. Where we selling from? The high. selling from the high, selling from the high. As long as it stays inside, don't go above the zone, we want to sell from the high. It's another potential 10-pip move. On the minute chart, you want to get funky with it. It's 5-second chart. See, now notice on the 5-second chart, it came above the high, so you can see it in real time. Right now, it's below the high. So if you was to take the sell, stop loss would be here. As long as it don't go above that candle, I'll sell from the high. Five pips. Low risk, 5 pips. Right? Not saying this, I'm not telling you how to sell. I'm just saying hypothetically, if you was to take the sell off the 5-second chart, I like to throw the low time frames in there. I used to tell people I used to trade on the minute. They thought I was crazy. But I'm gonna turn y'all into psychos too. If I'm crazy, I'm gonna turn y'all into psychos too, because these setups are happening on the low time frames. That way you can get in at the ultimate entry at the earliest entry possible and risk minimal to nothing. 5 pips is nothing. But that's a potential setup coming from Euro NZD if it wants to bounce from the high of that zone. Let's go back to the 3-minute. I'm not gonna hold you guys too much longer. I'm gonna open up the floor briefly for about 5-10 minutes or so you guys can ask some questions. You can either ask them in the chat. I got the chat up so I can see the chat. Y'all can either ask in the chat or in a few. We're gonna open up the lines and y'all can ask away. We're gonna do a couple of, oh my gosh, we missed that. Oh no, that's Euro JPY. We missed that. But look, Euro JPY is still falling. That trade's still falling. This trade from the entry shot down 40 heads. Live while we're on the line. It's Asian session. People eating dinner right now. And we eating off of the session key right now. Well, potentially, if you took the trade. I know I ain't taking no trade, so I ain't making no money. But it's okay though. It's okay though. These sessions hopefully will go like this every single time. More than less is going to happen like this. Every single trade session, I'm not anticipating every session we catch 50 to 100 pips in and out. It doesn't always work like that. But as you can see today, potential trade setups on all JPY pairs for at least 40 pips. All of them. It's Asian session, ain't it? Why we ain't trading JPY pairs? No disrespect to my Asians out there. But those are all of the setups that actually happened. Was the JPY crossovers, right? All those are already done. All of the other ones are still kind of lingering in the zones. So Mark asks, are we entering the trade on the body of the candle being above or below the zone, or is the entry based on the wick? Good question. Now, those wicks can be tricky, man, because those wicks are the traps. The wicks, you can utilize the wicks to your advantage, right? But the wicks are on, say, for instance, you get a candle on the 5-minute chart. The candle's breaking above the zone on the 5-minute chart. Let me see if I can find one. Let's see. All right, right here. Might be a perfect example. You see candles breaking in on the 3-minute chart, right? They're going above. Naturally, if we're scalping, we could have took this by, put out 10 pips anyway. But on the candle standpoint, if you use looking at it on a higher time frame, if you look at the hour chart, this would be a wick, right? Or a higher time, or like a 15-minute chart or something like that. It would be a wick at the top, and it will be back inside the zone. So naturally, if we're seeing the wick, we want to see the close of the candle, but the close of the candle definitely had. If we're looking for the buy, we got to see that close above the zone for it to be complete, to confirm. But if it comes outside the zone within the 3-minute session, but the 3-minute candle is not over with, and then it pulls back into the zone and then close back into the zone, even though it did briefly break above on the lower time frame, like the lower time frame on the minute chart may have broken above twice. You got 2 candles above it, but on the 3-minute chart, it's still in the zone. 5-minute chart is still in the zone. 15-minute chart is still in the zone. So your top-down analysis still is in play, but you have to just factor in that if you're on a lower time frame, you're looking for smaller moves. If you're on a higher time frame, now if it's telling you that you're selling, Let's pull up Euro JPY, prime example. Small time frame, 15-second chart. Sell. We selling on the 15-second already. We're already 15 seconds in. 15 seconds into the minute candle, we already in. 15 seconds into a 3-minute, 5-minute, or hour candle, we already in the trade. Hypothetically, right? Selling. But being that it's selling on a 15-second here, it's not telling us to sell on a minute chart or the 3-minute chart yet. This is us getting in super early. But if you got it selling on a 15-second, it's selling on a minute. It's selling on a 3-minute, 5-minute, 15-minute. It's selling all the way down to the hour chart. You know you're in selling territory. So you know you can continue to hold the trade. So if you get in early on a minute chart and you're watching it, and then it tells you to sell again, you get another sell on a 5-minute. Well, okay, I can hold it. If you're watching it and then it's telling you to sell again on a 15-minute, you know you can hold it. And then it's telling you to sell again on an hour, you know you can hold it as it's moving further and further in the profit. There you go. There you go. Mark said that he's been entering on a 1-minute and 3-minute. And in a sense, that's being conservative. But he's been watching it on confirming it on the hour chart. The natural signal is from the hour time frame. The signals that we sending out is from the hour candle, right? But if you getting in the entries on the 3-minute, you getting in before the hour signal even sends out. You probably already caught your 10 pips before the signal even comes. The signal is just confirmation that you can either hold or you can start over and get back in. Which is great question. Great question. If you guys have any other questions, you can feel free to ask in the chat, or you can unmute yourself. I'm gonna give you a sneak peek of the golden key. Now, the golden key tool, I've just been back testing this for a couple of weeks now, but the golden key tool was ultimately for gold, silver, platinum, all your metals, and your indices for the indices traders out there. Your US 30s, 30s, your nasty NASDAQ 100, your S&P 500, your Russell 2000, stuff like that. That's what the golden key was for. Same rules apply. Same thing that we're talking about here with the session key, same rules apply with the golden key, right? But what I noticed was that the golden key also works on the Forex pairs. And not only does it work on the Forex pair, it gives you a different zone. And the zone is usually smaller than this zone on the session key, right? So I'm gonna pull up GBP NZD because I saw this, I believe it was yesterday. And I'm gonna pull this tool up and I'm gonna show you why this tool is so important. And once you understand both tools separately and how they work separately, and then when you combine it, telling you. Now notice here, right? Notice here, we got to break it above the zone. We got to break above the zone. And this zone, I mean, this buy went up at least like 50 pips. I caught this trade live yesterday as I was speaking. I was trying to record the video, but the recording stopped on me. I was doing this live yesterday. Unfortunately, you guys can't see that video, but I took this trade live based off of what I'm about to share with you. So again, then I caught re-entries here. That's why that trend line was here. So again, if you want to buy the market, right? Oh, what was that? What did I just delete? I think I deleted the session key. If you want to buy the market, where do we want to buy from again? We're buying from the low, selling from the high. Shout out to Jay. Said he loves the golden key. But yeah, I'm going to show you guys how to utilize this golden key with the session key on the Forex pairs. So notice this buy, right? Notice this buy. Now, ultimately, when we're looking at this chart, just judging off of the session key and what we know so far, we sell the market, right? We're selling the market because it's below the zone, right? Now, if I was to turn on the golden key tool, look where it stops at, or where it lands at. This is the golden key zone. So yes, we're below the session key. Look where this downtrend, this patterns, this retracement, because it was going up anyway, it was going up. Look where this retracement stopped at. If it wasn't for the golden key tool yesterday, I wouldn't even seen this move. I caught it at the bottom of this uptrend because of the golden key tool. Look where it stopped at. Look where it stopped at. It told us to buy out the golden key tool into the session key tool, back down to the golden key tool, See where it's retracing from? You see why these zones are very important? These tools work together, will give you areas to buy and sell from, right? So notice it breaks above. We broke above the session key. The buy from the golden key is heavily in the profit. You got the buy right here is in profit. Came back just in case you missed the entry, went all the way into profit. And then the session key broke, right? It didn't give you the buy because it came in earlier. But you're above the session key, so you know your buy is valid. If you bought it from the golden key tool, you're up 50 pips. All you need is what? 10? You're up 50 pips because of the golden key giving you the signal to buy before it even got above the session key tool. So this is buying from where? Buying from the low. The golden key tool may give you the high or the low, in addition to the session key tool giving you the zone. Hopefully, y'all caught on to that. But we're going to get on to that. That was just a brief. I just want to, hold on. Let me see if we can. I want you guys to see, because I did some back testing on this. Let's just randomly go through it so you guys can see. I ain't going to hold y'all too much longer. If y'all got any questions, y'all can feel free to answer it in the chat. What time is it? 7:45. I ain't going to hold y'all much longer, but maybe about 15 more minutes, 8 o'clock. Let's go to lower time frame. Hop in the chart. USD. See the sell on Euro USD, right? See the sell. Look at the golden key tool. Look where the golden key tool is at on the higher lower time frame. The golden key, the sell was from that. This is the high again of the zone. Let's go to the next one. Let's go to the key. Next one, we're just gonna go to the next one. Here's your golden keys. Here's your golden key tool here at the bottom of the zone. So notice you got the sell coming from the session key. Then you got the sell coming from your golden key. The golden key is sitting at the bottom of the zone. Here's your sell right there. You're done. I mean, the first move from the bottom of the zone gave you your 20 pips. You came back, just in case you missed it. Here's the second entry from the bottom of the zone. It gave you another 20 pips. Came back once again for a third time for another entry and gave you 150 pips. If I take off the zone, you're just looking at it blindly. People seeing this move, they're buying before this even happened. People are buying. They're buying. They're buying. They're buying. They're buying. They're trying to catch the impulse flag. Impulse. They're expecting it to go up. They're buying. In order for the smart money to push it down, they have to anticipate you to buy. They have to make it seem like it's going up. Everybody was buying. They were buying. Fortunately, we're fortunate enough to know that we're not supposed to be buying because we're selling from the highest point possible so you can get the 200 pip move. And a lot of the times before this move happens, it's definitely going to give you entries. I mean, other than today, like a few pairs today just ran for 100 something. But a lot of these moves during Asians set people up. Everybody getting caught in the trap. They're getting into buys. They're getting into sales. They're getting caught all into the trap. Guess what we selling from? The high. Is there a trap at the high? Your stop loss is minimal. It's 5 pips, 10 pips, or ultimately 40 pips. You ain't got to worry about all of this. If you stuck in this consolidation, you already stuck in the sale and you in profit. But if you're trying to get your way into the market, you're not buying here. Why would you buy? And it's under our zone. Why would you be buying in these candles? Why would you be buying? Unless you just dope with the technicals and you're a chartologist and you're anticipating the pullback to the zone, which what we will get to in future sessions. You can anticipate the pullback based off the technicals. But if you under the session key tool, if you're under the golden key tool, why are you buying down here? Why? We're selling. Where should you sell it? The high. Now, if it's telling you to buy and it goes into buyer's territory, then you should look for buy opportunities. Where would you buy at? The lows of the zones, or ultimately a retest of the zone. But if I'm already in seller's territory, I'm not looking for buys. I'm gonna just wait for the pullback and catch the sale because we're selling. Don't go against the market. Everybody else selling, like, oh, I'm gonna buy. I mean, if you're going against the retail traders and you with the smart money, that's how you do it. But if we selling, if we all looking for sales, why are you trying to find a buy? What type of crystal ball do you have? Because I know that we selling. Golden key and session key is telling us to sell. Look at the retest. It sold again. It gave us a lower low. And you're going to get in this retest and try to buy when you're supposed to be selling from the high. So you can catch 200 pips. Straight in the profit. All right, let's do a brief scan before we get off of this. Y'all got any? Yeah, we got some things coming, Jay. For the tools, this is like an addition, adding the get golden key with the session key. I'm getting the programmer to add, hopefully we can get them to add the ultimate entries, the optimal entries. That doesn't happen often. We want to try to get them to add that. That way we don't miss nothing, right? Because that GBP NZD trace that I showed you that came from the golden key, it happened at 2 a.m. Fortunate enough, I was up at 2 a.m. watching it. My babies was up, so I was up, and I was watching the charts, and I seen it, and I ran in the office. I'm like, hold on, is the goal? Is that telling me what I think? So I started looking at it, and it fired off at about exactly 2 some a.m. and got in at the very bottom. But that's adding the golden key with the session key. I don't want to overdo it with you guys, so I'm gonna take the golden key back off. We're gonna get into that later sessions. Right now, we want to focus back on the session key. But I just wanted to give you guys a sneak peek of what's to come, because we have some things that we can add it to make it even easier, or at least make it even stronger for you to find some of these setups by adding both of them together. There goes that trade there from the high, where it is your 10 pips on Euro NZD. Followed it from the high, even though it didn't tell us to sell yet, because it ain't below seller's territory. Those are 2 entries right there for the sell from the high. That's about 10 pips. It's a 5-minute chart, so that should be about 10 pips. If I went to a minute chart, you might see it a little bit better. Look at that. Look at where the stop loss is at. Stop loss is like 2 pips. Catch it from the entry or the high. There's your 10. There's your 10. Here's another one. That's a potential 5 trades, or 6 if you had to count the first one. So let's go. Let's keep scanning. See if I can give y'all one more setup before we leave, or a setup to at least look out for. I like that shoe wedge pattern. It's a nice shoe wedge pattern, man. So if it respects these lows, ultimately it can continue break below. If we're already in this sale, I would want it to keep going. That way I ain't got to reformulate and try to find the retracement. But if this was the stop or the low of this bearish movement, right? Use our order blocks. If this is where it stops at, this is where the train stops at, it wants to turn around, and it wants to turn around, where do I want it to turn around to? If I want to sell, because it's telling us to sell, I want to sell from where? The highest points possible. Either here, get rid of that for now. Sell from either here, ultimately, or here. Now that it is broken below the low, it gave us 40 pips. I'm not really expecting it to pull all the way back up here. It might only pull back up to the low of the zone, right? So if I wanted to sell this market, I would sell it from somewhere up here, if it gets up here. we're already in profit, already to close out the trade. If I want to get into another sale, the market has to pull back up here. The type of trader I am, if I'm anticipating this area to hold and it has to pull back up here, this is for the manual technical traders out there. That's a potential shoe wedge pattern. If it breaks this trend, if it holds this level, it doesn't go below this level, and it starts to pull back and it breaks my trend, that's a potential manual trade for a buy back up to the zone. Those are some trades that we may be able to catch live. That's more riskier because it's going outside of the natural strategy of using the tools. That's mainly for technical analysis. But what if this zone doesn't hold? If it doesn't hold and it breaks lower, then our sell is still in profit. It's going further in the profit. As you can see, it respects the trend channel. That's putting it in the trap. It respects the trend channel, and now it's breaking below the zone. So we're still in a downtrend. The only way to show us that we're going to break this downtrend is to break market structure. So it might continue to go lower, 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 as we eventually start breaking market structure, which is this brief trend channel here, and your ultimate brief high, or your previous high, which is up here. So as long as it stays below these areas, we're still in sell. I mean, we're in seller territory anyway. But if we want to look for a pullback back to this zone, it has to break structure. It has to break this trend channel, and then it has to give us at least a higher high to show us that it wants to come back to the zone. So if that's the case, if we're anticipating the pullback and we're seeing the break of the structure, if we want to buy, where should you buy from again? You want to wait for it to break up here to buy to the zone, or should you buy from the low? We buy from the low, we buy, give us a chance, a smaller entry. I mean, a smaller stop loss. Buy from up here. If it breaks this trend channel, right? We buy from here. Low is 7 pips, stop loss. That's technical trading. I would do that on my own technically. I'm not saying that I would take this trade. I'm not telling you guys to take this buy. Just based off of technical analysis and going through the market, you have to see what the market gives you as it moves forward. It already moved forward. It told us it was selling. We caught the potential sell. Now we got to brace the pullback. If you're holding this trade and you want to start protecting your profits, where's your levels of your stop loss? You got to start. If you want to close out, you want to close out your trade at the highest profit available. You don't want to wait for it to get all the way back up here to take the profit, right? But if it starts showing you that it's holding structure, it's already hit this low, came up, hit this low again, it's protecting this area as a floor. If it starts to break structure, we would start taking partial profits, right? Ultimate high could be your stop loss right here. As long as it doesn't break below this green area and it breaks above the trend, we may get a brief pullback. How far? It may only come up to here and then go down another 100 pips. We don't know where it's going to go, but as the market moves, we have to trap it. We have to, that way, once you trap the market, it's going to tell you what it's going to do. If it breaks below this area and it goes below it, then we know we're still selling. If it respects this area all the way around and it starts breaking the trend channel, then we know we might go higher. So we just got to wait for the market to tell us what it wants to do. Let's do a brief scan real quick. Euro USD still in the zone. It's getting near that bottom. It's getting near that bottom. Y'all pay attention to Euro USD. Euro CAD been consolidating the entire time. Euro AUD. Sorry, NZD. Euro AUD. Really don't see much other than the JPY pairs. Really don't see much. Don't see much. Uh-oh. GU, just like EU. Pay attention to GU and EU. One or two things can happen, right? We don't know whether to buy or sell yet. If you're totally blind and you don't understand the markets, if you're just using the tool itself, it's not telling you to do anything yet, right? But you know one thing, if you wanted to buy, where should you buy from? The lower the zone. If you wanted to sell, where should you sell from? The higher the zone. Do you know if it's going to sell and go lower? You don't. But if you can get the sell from up here, and then you get the sell from the higher the zone, and then it breaks below, you can get a whole nother sell from here. And now you got the sell from the higher the zone. You can hold it or close out. And then you can just continue on with the ultimate break. Ultimately, you don't even take the sell until it tells you to sell. Did it tell us to sell? Nope, not yet. It didn't break below the zone yet. But if you did want to catch the sell, the best place to catch it is the high. So let's keep going. Let's keep going. But that's the GU and EU is nearing the low. We're going to pay attention to that right before we leave to see if we can get a bounce or a break. See what happens. That GU is getting near. So if this does want to bounce and does want to come back to the high, and if you did take this trade from the lower the zone to the higher zone, it's 20 pips. Again, how much you need? 10. It's 20 pips in between the zones. So if it does respect the low of the zone and want to go back to the high of the zone to test the high of the zone, all you got to do is wait for it to break your trend. There's that trap again. You got your bottom, you got your trend channel. If it wants to go higher, it has to break the trend channel first. So if you want to be conservative, you wait for it to break the trend channel and you catch it up. This might be the low of the day. You never know. We don't know. This might be the low of the day. Breaks the trend channel, breaks above the zone, give you 50 pips, come back, retest the zone, give you another 100 pips. We don't know. If it does do that, this may be the lowest point you can get into GU as we speak, hypothetically, anyway. Right? That's the bounce. Look at the bounce. As we were speaking, it's starting to bounce. Did it get quite too below? It didn't, but it's definitely going to respect it and show us if it disrespects it, it's going to break it. If it respects it, then we know to buy from the low. 15-second chart. If you was to take this buy based off of this break, right? Your stop loss is below the low, at the low, right? The stop loss would be about 8 pips. Or you can just wait for the natural signal, take the signal, and utilize the 40 pip stop loss. There's still nothing wrong with that. Because a lot of our signals win more than they lose. But if you wanted to get a high risk, a low risk, high reward ratio, there it is. There's your entry from the low of the zone. Stop loss is right below the zone. And you're straight into profit. Hopefully you guys are seeing that. Hopefully you guys are seeing that. One quick scan. Let's get back to the 1 minute, 3 minute chart. Let's go back to normal time frames. But yeah, right now we don't really see anything too juicy because a lot of this stuff. I like this sell. I like this sell. You're okay. There we go. That's why I love the alerts, baby. You're okay to start the break. I love the alerts, baby. And if you're not looking at it, not paying attention to it, that alert like, oh, something breaking. I don't know what it is, but something's breaking my zone on a 3 minute channel, and I need to get into this trade to get myself fixed. Let me get to my phone and my computer real quick. Notice you got a trend channel starting to break the trend channel, respected the trend channel, respected again, and is now breaking your zone. Ultimately, where do we want to sell from? We want to sell from the high. Now, as you've noticed in some trades, just like the trade that we saw in Euro JPY, it didn't come to the high. It gave us a sell, stagnated a little bit, and it sold. So a lot of the times you can get to the sell, it might go straight to profit. Y'all want to take the sell? Y'all want to take the sell? Let's go in the high time frame. Let's do some. Notice I ain't do no top-down analysis. I ain't do no trend channel. I can do all of the technical stuff. We can get into that. That's what the Rhino is for. That's what he teaching you about the psychology. He teaching you about the patterns. He teaching you what drives the market in and outside of price, right? We can get into all of that. I haven't even gotten to that. Let's go to an hour chart just to see what it even looks like. What we looking at? We looking at a downtrend. Love to see that. Look, the session is down, one pullback, down. We're going down. What are we looking for? Sales? Ultimately, why go against the trend, right? They tell you your trend is your friend. What trend is this? A downtrend. So what should we be looking for? Sales. Where should we be looking for sales? At the highest point possible. Right now, look at that sale at the high point possible. We gave you a sale yesterday. Look at that sale. 80 pips. Look what it came back to. Look where it came back to. I guarantee you a lot of people started buying. Retail traders was buying up there. Look, they saw all of this. They was buying, right? It came to the high. Ultimate high. You sold it. If you caught the sell from this high, this happened a couple of hours ago, right? A few hours ago. Put the sell up here, and you're holding. You're in the profit on the trade, and then you go and you notice that it's giving you another sell. You laughing from ear to ear, or you smiling from ear to ear. You done caught it from up here. It's giving you to say you got it early. It's now telling you to sell. Now it's pulling back, right? So we got to pull back. Let's go to the lower time frame. And this is going to be the last one for the day. Hopefully we can catch this setup clean. And so went below the zone and stopped, came right back into the zone. Naturally, we want to see areas of interest. Our areas of interest ultimately is the high of the zone, right? Or even the trend channel. You can use this as well, right? Our stop loss is way up here, 40, 30, 40 pips. If all else fails, you can use that. But if we wanted to get the sell, let's see you. We're going to get to that in a second. We're going to get to that. If you want to get into the sell, what should we want to sell at from the highest point possible, which is up here? Will it get up here all of the time? No, it won't. What are your other areas of interest or your ceilings? Which is either your potential stop losses if you're already in the sell or a higher entry for the sell, right? You have an area here and you have another area here. So these are our areas of interest. If we're selling the market, we were anticipating the sell. If it comes back to the zone, as long as it stays below these areas of interest, which is our previous highs, then we know that the sell is still valid. If we start breaking previous highs, as long as it doesn't go above the zone, the sell is still valid, right? So these are our areas of interest. That is like a way of protecting you visually. You can see like, okay, I might be in a little bit of drawdown. If I entered right here, it's pulling back on me, but it's still below my areas of interest. I'm still good for the sell. Still good for the sell. Naturally, where's it supposed to sell at? The highest points possible. If it pulls back there and it stops and retraces, you can get an entry from up here or an entry from up here. If it's selling the market and it comes all the way back up to the high of the zone, you can ultimately get an entry from up here. If your entry is up here, your stop loss is less than it is if it's down here. Now, being that we're on the minute chart, I'm not anticipating the sell just yet because it bounced. And it's only one candle that came out the zone. So this sell isn't even valid for real. The only way this sell is valid is if it respects our areas of interest. We're going to see what it does in a few minutes. If it respects it and it comes back down and breaks the zone again, I will get into the sell because it's already showing it's going to respect these areas. It's not going nowhere above these areas. We're anticipating to go below the zone. Right now, it's pulling back to the zone. So we can pay attention to that. That's Euro CAD. Let's go to Euro USD. Same thing. Same thing. Brief pull outside of the zone is on. This is a minute chart again. So we gotta see if it wants to respect. Do you want to sell at the low? Or do you want to sell at the highs? So it's going to anticipate you to sell at the low. But luckily with this zone and these tools, if it's telling you that this is the sell and this is the low, we just have to wait to see what the market tells us. Is it going to respect these levels? Just like we did with Euro CAD. We line up our areas of interest. And if it respects these levels, then we know we're still good for the sell. I believe GU is doing the same thing. Oh man, I'm anticipating that pullback. I want that buy off of GU. But notice I want the buy, but it didn't break the market structure yet. It's wick, it's trapped though. It has no choice but to do one or two things. Either break the low and give us the sell, or break this market structure and give us the high, at least back to our areas of interest, or ultimately back to the top of the zone. We can get the sell from the bottom to the top of the zone. We got our 10 pips. That's 15. That's 15. Let's go. Let's scan one more time. See what we got. CBP CADs. Notice what it's doing. It's bouncing, bouncing, higher, bouncing, bouncing, higher, bouncing. And ain't came up here yet to test nothing. So it's either going to fall through the floor and never come back up, or it's going to keep bouncing. Because if it can't get no lower, it has no other choice but to eventually start going higher. How would you know? When it starts breaking your market structure. So that's another potential. This may be another potential bounce from the low on GCAT, right? PNZD still lingering, but it's been bouncing from that high. Looking for that bounce to the low. We can get this sell. That'll be a beautiful sell from the top. We'll pay attention to that. Recap on that tomorrow. There go that shoe wedge pattern. Anticipating that buy on GJ. Whew. Still in the zone though. Ain't really. I mean, we could take this trade based off of technicals, but based off the strategy and the tool, ain't even no point, right? Ain't no point of risking unless you know you're in the clear. If you're in the zone, you're not in the clear yet, unless you're selling from the high or buying from the low. But if it's in the middle like this, you don't know. I mean, unless you're using your own resources, your own tools, you may figure it out. You know what I'm saying? But as far as with this strategy and this tool, we don't know where it's going. It's still in the zone. It hasn't even reached the high or low. Look at that pullback again on all JPY pairs. That shoe pattern, that would have been an easy pullback. In the channel, that's a shoe wedge pattern. I love them shoe wedge patterns. That's an easy buy. Back to the zone. Back to the zone. It's already disrespecting this high. So if we get back to this zone, I would anticipate you guys pay attention to all of them AUD JPY pairs that we caught earlier. If it gets back to these zones and it's respecting these zones, hopefully you had a tool. If you don't, I highly suggest you get inside of the community so you can get these tools, baby. But if it comes back to the zone, sell it again. Sell it again. Unless it goes above the zone, and of course, you know to buy. Right now, a lot of these trades are stuck in the zone. So I believe it was EuroCAD. That bounce from the bottom, you guys. Bounce from the bottom, back to our areas of interest. Euro USD, same thing. Bounce from the bottom, back to the area of interest. Now, if you wanted to sell, instead of selling here, naturally you could have bought from here, from the bottom, if you're anticipating to go higher above the zone. That's more riskier. But if you did want to sell, following the sale, where's your ultimate selling opportunities? The highs is a potential sell opportunity, right? And if you was a seller's market, and if it sells from here, as long as it doesn't go above the high, it's 13 pips. You want to wait for it to get to this area, and you sell from here, 6 pips. Or you can wait the conservative way and let it show you that it's going to respect these areas. Then it comes back down, breaks, and activates your original sell. And hopefully it goes further and further in a profit. And as long as it's below the zone, you're in profit. Notice your entry is at the zone. As long as it's below the zone, you're in profit. But where to sell from? Areas of interest and ultimately the high of the zone. It may not always reach the high of the zone all the time. So the only other areas to sell from, as you can see as we speak, is from the area of interest. Now, being that this is the minute chart, it's short-lived, right? Like I said before, when we first started, all time frames are the same when it comes to technicals. If you got an area of interest on a 4-hour chart and it stopped on the 4-hour chart and it's a 4-hour candle, you got your 10 pips. You got your 10 pips. But this is closing right at the area of interest. If it doesn't go no further above it and it respects it and it starts coming down, you can sell it from the high. This is the current high. If it breaks above it, then your next area of interest is here. And you can sell it from here if you ultimately are looking to sell. Now, being that this trade setup is a little tricky because I wouldn't naturally want to sell because this sale was short-lived. I need to see at least 5 pips out the zone. 3 to 4 or 5 red candles out the zone, showing this just like Euro JPY did or JPY pairs. It broke out the zone. That thing pulling all the way back to the zone. I'm telling you guys, that thing pulling back to the zone. It broke all the way out the zone and it's doing just as it's doing now. Pull back to the zone. I need that. I need that part. But on Euro USD, it didn't do that. It kind of snuck his head out a little bit, tried to sneak you into a sell and pull right back into the zone, right? So ultimately, if I did want to sell this market, I would much rather sell it up here than to wait for it to break down here. But that's just me. That's just me. That Euro JPY might give us a better, I like this setup better because it already gave us the sell. It already went down 40 pips almost, right? And it's coming back to the zone. I would much rather risk taking this sell than taking the Euro USD sell because the Euro USD sell is invalid. It didn't really break below the zone. We already saw what Euro JPY did. We already saw what it did. Watch, after this retest, and it might not retest, like I said, I don't have a genie in a bottle or nothing like that. But if it does retest, man, and it gives us another 10 pips, we're done for the day again. But we're gonna see what it do. We're gonna see what it gives us. A lot of the times it might not even reach. This when I start going down, baby. 5-second chart. We're gonna see what it gives us. We're gonna close out after this one. Oh, it's already giving us divergence too. Oh, this is about to be a sell, folks. About to be a sell. It's already giving us divergence. Our oscillators are going down. Price still going up. That's divergence. Put the technicals in there. Break your trend channel. We got one there. Got a more recent one here. Just protecting yourself and trapping the market. We'll see what it do. If it respects our levels and then starts breaking these trend lines, I'm getting in for another sell from the top of the zone. Potentially, right? A lot of the trades not gonna happen where we win every single one of them. So I want you guys to anticipate that. I don't even anticipate that. Hopefully we can go on a 100% win streak like we did in the Signals channel today. Shout out to the members of the Signals channel if they took advantage of that. But so far so good with these euros, these JPY setups, man. They gave us clean setups and they go to a potential first break of the sell, right? So if I was to sell this, and I know it stays, if you want to do the conservative way, you sell this trade. If it sells and it breaks below, if you wanted to sell this trade, right? Ultimately, where would the stop loss be at? You can do the stop loss right above the zone, or you can use the stop loss that's at the lower the zone, right up above here. So if it stays below the zone, if it comes and retests, like we've been seeing some of the times, it'll wick to the pit, retest and drop. If that's the case, I can put my stop loss a good 5 pips above the zone or into the zone, right? That would be my stop loss if I was to take this trade. If it breaks below this low here, it breaks market structure, that's a 10-pip trade, 11 pips. 11 pips. If it gets even closer to the zone, it is going to give me an even better entry. So we're going to watch this and we're going to end it on this trade. Euro JPY, I believe all of them is doing too. DJ, see which one looks more clean. That's not quite there. AUD JPY, it's not quite there either. Looks like they all got one more push. One more push in them. NZD JPY is the closest I see. One more push. Yeah, I think this might be the cleanest one is NJ. Oh, damn, I didn't mean to do that. NJ might be the cleanest one. Come on, man. Start adding our technicals. I don't want to miss the move. Look like it's happening already on NZD, JPY, baby. So if I was to take the sell, ultimately, stop loss. Where's your long short? Where's that at? Stop loss 5 pips. Take profit is what? Can't even see it. 10 pips right there. That'll be the trade. On the 5-second chart, again, we on the 5-second chart. That would be the trade if I was to take this trade, right? Under the zone. As long as it stays under the zone, we'll at least give it about 5 pips in the zone. As long as it stays under the zone, it respects the trend. It already broke the trend channel. Respect it again. This is the 5-second candle. 5-second chart. Notice all market structure. If you get a break and a retest, notice it's a 5-second chart. It broke and then it retests. So your technicals and your market structure still applies on the lower time frame. Notice what happened after the retest. This is live, folks. This is live, folks. People thought I was crazy trading on these lower time frames. But as y'all can see, that's where your optimal entries come into play. So I'm not going to hold you guys too much longer. We're going to watch that potential. What the heck is that? We're going to watch that potential setup on all of the JPY trades. If it respects this zone, then we could potentially get into another sell on all of them. NZD JPY, CAD JPY is in the zone. It's a much cleaner one. CAD JPY is in the zone. So I would take, if I would take this entry, I would take the entry when it comes back outside of the zone and starts breaking these lows. So I put a stop, I would put like a stop, sell stop right in this area, right? But look at that pullback. Nice sell. Let's get off of this 5-second chart. I don't want to confuse y'all. I don't want to make y'all think that y'all should get down. But y'all, I will only advise to do that once you understand complete top-down analysis on all time frames. Look at that. Look at that beautiful buy back to the zone. I called it. That shoe pattern. That buy. Which one was it? Which one was it? Because I put the box. Put a box on one of them. Which one was it? Was it GJ? EJ. There you go. It's that box. Shoe wedge pattern. Look at that, breaking that pattern on that minute chart, man, on that EJ. That was a beautiful buy to the upside, man. That was a beautiful buy to the upside. Now we're trapping it all over again. So if you guys had fun tonight, if you learned something, if you're excited, if you are eager to get into these funded accounts, eager to understand these tools more, eager to get on our live sessions, well, let's drop a 777 in the chat. If you guys have any questions, feel free to ask either in the chat. Y'all can unmute yourselves. Hopefully, I think y'all can mute yourselves. Hopefully, I ain't holding y'all voices captive. We just celebrated Independence Day. We about to be independent traders in here with these resources, these tools, the community that we have, the traders that we have inside of our community, the educators, man. It's a beautiful thing to see it all coming together into true shape and form. But hopefully you guys enjoyed tonight. I enjoyed being here with you guys. If you guys have any further questions, y'all can, like I said, ask in the chat. I kind of want to see if we can get one of these setups to fire off on these JPY patterns. It don't look like, oh, nearing closer. Telling you guys, y'all watch that retest and that resale is going to be beautiful on this GJ. It's going to be beautiful. GJ, so y'all can keep your eyes out on all the JPY crosses. GJ, UJ, CJ, AJ, NJ. Yes, sir. Yes, sir. Tomorrow night, same time, same place, baby. Same time, same place. Hopefully, now that y'all kind of got an intro, we catch some of these setups, even though we saw the setups beforehand. We're going to start with tomorrow. We take some trades together, baby. Even if it's just on demo to practice, I want you guys to practice. Even if it's you don't have your funded account yet, get you a demo account with $100,000 just so you can see what it feels like to get them 10 pips and be done in 30 minutes. And you know, made $1,000, $2,000, $3,000. You gotta know what it feels like to attract it and manifest it. 6 p.m., baby. 6 p.m. Eastern tomorrow night. Same time, same place. DJ starting that divergence, starting to kick in. They go there selling DJ. They didn't quite get to the zone, but we got that push. Just keep an eye on it, you guys. Keep an eye on it. I had fun with you guys. Hopefully you guys learned something. For all of the ones that stuck with us to the end, y'all know, for the ones that know me, know I'm long-winded in the mud. But hopefully you guys, this is recorded, so I'm gonna make sure I save the recording. Hopefully you guys learned something. For the 12 participants that's up here, y'all are real MVPs. Shout out to you guys. For the ones that couldn't stay, y'all are MIPs as well. Y'all are important as well, right? But hopefully you guys have some time to relax, catch some of these setups, enjoy yourselves for the rest of the evening. I'll see you guys tomorrow. Dre, you wanted to say something? Dre up here, you wanted to say something? Real quick before we end.
Hey, what's up, bro? Nah, man, that was a phenomenal session, man. You caught my attention all the way to the end. I'm definitely excited about the software, the tools. I'm looking forward to using them. I actually want to test them out on the lower time frames. I like that lower time frame strategy that you use, man. And, you know, you're going to help a lot of people make a lot of money with this software, especially combining it with the prop firm accounts. You know, like you said, if you catch it 10, 15, 20 pips, you know, a day and done, and you know, you're doing, you know, 5, 10 lots, you know, per pip, you know, you do the math, that's like, you know, a couple $100 a day in and out, 5, 10 minutes, you're good, you know. So, you know, I appreciate you taking the time to this call, man. And I'm looking forward to, you know, really creating some real traders, man, and helping people retire, you know, with this skill set, bro. So appreciate you.
I appreciate you too, man, for coming aboard, bringing the team on board, the community, the Hill community, man. It's just a pleasure to being able to work with you guys, seeing the things that we'll be able to do together in the near future is going to be phenomenal. So you guys buckle up. It's going to be a roller coaster ride, but it's going to be a fun one. As long as you got your seatbelt on, that's your risk management. As long as you got your seatbelt on, it's going to be a wonderful ride. So hopefully you guys enjoy the sessions to come. I'll see you guys in the chat.